Thanks everybody for joining. We've got an excellent participation this morning, so that's wonderful. A chance to give everybody the update and more than anything, fill in some details on the resolution that we're trying to get passed for the benefit of all shareholders. We'll just quickly go through where we are with the project. As I'm sure everybody is aware, we've made the final investment decision. That was very much a tick the box exercise, considering that we were already fully funded and permitted at that stage, and arguably some of the work on site had commenced. We did that because we did a 105 million secured bond. That was an excellent exercise. It progressed incredibly efficiently. To have funded the project literally within weeks. I think it's about 8.5 weeks from when the DFS was out is just a wonderful job, and due to the incredible team that we've got on site. That alone would save us millions and millions of dollars over the normal time frame that would be expected, which is closer to a year than weeks. And given that we have holding costs because of the incredible infrastructure that we've got on site, doing it quickly saved us literally tens of millions of dollars. We joined that in with a 60 million Aussie equity placement, and on top of that, the share purchase plan that was initially targeted for 5 million, but we took double that number. We actually had a considerable oversubscription on that, but taking double of what we initially thought was really a good governance there, that we couldn't extend that too much further. So everybody who wanted to participate got the majority of what they wanted, and that included the directors of the company who also participated. So that means that we're extremely fully funded. The details of that are out in our quarterlies, and I won't get into that in too much detail. It gets a bit complicated. The bond we get drawn down on, so we don't actually have all of that money in our bank at any one time. But it's fair to say that we are fully funded for moving forward, and that puts us in a wonderful position to move forward. The Hillgrove expansion is continuing. The build team hits site very early next month. As it has been mentioned before, the timing on the build is totally governed by long lead time item delivery. At the moment, that is largely on track. We ordered those items as soon as the DFS was complete. We knew exactly what we wanted, again, to save us much time. So the build works back from their delivery point, and that is still giving us project startup around about April next year, and there's a 4-month commissioning involved with that. So still on track there. The build team's all ready to go, and there's lots of work going on in that area. The definitive feasibility, which we won't talk about too much more going forward because we're moving into actuals, but that gives us an 8-year life of mine. It's averaging 80,000 ounces a year equivalent. Now that's an interesting one because that's done on our mid-price scenario, which was pretty conservative: gold 2,800 and antimony 41,000. Realistically, we're 8 months away from coming into production. Do we really expect the gold price to fall $500 from where it is now? Do we expect the antimony price to fall $20,000 odd from here? I don't think that's the case. So realistically, our spot scenario is more valid, but we'll see what happens when we get there. But on the conservative mid-pricing scenario, the numbers are still very good, as I'm sure everybody's aware. 250 million EBITDA, $1 billion worth of free cash flow, and this is before we extend the resource and the reserve moving forward. So some pretty exceptional numbers there. The biggest problem, I think, is some people don't quite believe them. At spot, of course, project payback goes to 8 months from the DFS numbers of 11 months. A little bit more on that, you can see the spot numbers there highlighted. they're very, very good. The incredible one to me is the all-in sustaining cost of gold of minus 3,200. That's a pretty amazing number, and very simple maths on that. If we're producing about 40,000 ounces of gold at minus 3,000, that we're sort of north of 8,500 Aussie an ounce. That's a very simplistic way to look at it, but that's pretty well where it sits. We've got all our offtakes in place on the antimony side. We're working on the gold side. There really is no hurry there. It's a very competitive process, and we'll get that in place in the near term. Huge amount of upside with the project through resources and reserves. We haven't started converting any resources into reserves at this point because the entire team has been totally involved in what we're doing. But in the very near term, we will start that process and look forward to releasing further updates on reserves and resources. We will also be releasing drill results as they come through. That's something that we would expect probably every 2 months or so. It's quite an involved process getting these things out. We're drilling deep holes. We do have 4 rigs working, but still, it takes a couple of weeks to drill a hole. It takes a couple of weeks to work out what's in the hole. It can take 3 weeks to analyze that, and then of course we have to place all that information in one spot and understand what it means before we get it out. So a release every several months from the drilling is probably about what would be expected. Again, we're a little bit behind on that at the moment because the entire team has been tied up very, very heavily over the last few months. But now that the funding and the DFS is complete, and things will go back to a little bit more normality there. So we look forward to that stuff coming through in the near term. What we're mainly talking about here today, and I think why most people have joined, because there is a lot of presentations out there already from the numerous conferences and everything that we've done over the last few months, but people are interested in what we're trying to do with the EGM. And we've got several resolutions there that we are trying to get through, and we would like to get people on board. And it's all about recruitment and staff retention. I've done arguably well over 200 presentations during this funding process to get to where we are now. And when people ask me about risks, my answer is identical in every single one of them, and it's people. I don't consider that we have a metallurgical risk. I don't consider that we have a mining risk. We're in a spectacular location, so all of that helps. But the history of startups over the last 4 or 5 years, it's all about people. There are many examples of mines that have had massive share price destruction because they haven't met the targets that they've put out, and largely that is because they haven't actually been able to build the teams in the timeline that they want to get going. Our timeline, remembering, is a bit more compressed than most, so for us it's a larger issue potentially. So we need to be right across it. And to make sure that everything goes well, it's about having a good team and retaining that team. As we've already said, we're very, very keen to have people living in Armidale as well. So for most people, it's not just a matter of taking a job. It's actually a matter of relocating from wherever they are. This is a very big step for a lot of people, as I'm sure everybody can appreciate. So we need to reward people for that, because the benefits to the company are significant in many, many areas that we won't get into. But it's very important for us to do that. So we're putting as much focus as we can on incentivizing people to, 1, move to Armidale, and 2, stay with us, certainly for the first couple of years, so that we can get all our procedures in place. And everything that we're doing on this is aimed to make that happen. The difference between, as I say, what happens when you don't have the team in place and when you do have the team in place, there's numerous examples out there. It would be inappropriate to mention names, but it is something that is our primary focus here. So by issuing performance shares to people for retention, and with senior staff, there are other performance hurdles in that. We see that as a primary driver to the success of the project, kicking goals, and that, of course, leads directly to improving shareholder performance. Yes, there is a dilution factor involved with that, but I would ask people to focus more on what is the share price than how many shares are out there, because that's how you measure your wealth value and the value of the company. For us, it's all about getting the job done, and that will flow directly through to the market capitalisation and the share price of the company. So that's 100% of where we're focused by what we're talking about here. I'm not going to get into details of what individual contracts are with individual workers. That is commercial in confidence and very inappropriate to talk about a position here. But we incentivise different people at different levels depending on what their role is with industry standards. And for the senior staff, that is a big ticket item for them. We are not the highest payer in the country, and we don't want to be at this point, but how we can make that up is by incentivising people through shares, and of course they become part of the company. And interestingly, one of the first questions that people ask the directors is, how many shares do you own? Because they see that alignment. I see that flow right through, that if everybody in the company is a shareholder of the company, then the alignment with the workforce and the task ahead is 100%, and I don't think you can do much better than that. And there are many examples, not too many in the mining industry, but there are many examples of where other industries have used this mechanism to their benefit to improve the value of the company. Workforce turnover, again, that's why we're incentivising people to stay for a couple of years. The industry workforce turnover at good operations is considered to be 30%. I think that's a horrible number, and we're aiming at considerably less than that. But you can well imagine at other operations, if the average is 30, some are a lot higher. We want to reduce that as much as possible. The costs for training, re-employing people, loss of knowledge, loss of IP through the project is really quite incredible when you're talking sort of industry average numbers. We're in a different part of the world. We're in a unique location, being right next to a town of such quality as Armidale, with the facilities that are there. We're trying to retain people as much as humanly possible. So it all links back to what we're doing in this share incentive. And it helps preserve cash. We are building this project with debt. It is totally inappropriate to use cash that we have borrowed for this. So a share issue is the best way that we can do that. Plus, it totally aligns people with the company. If the share price goes up, they get more. So that's the incentive that we're offering people. As the project moves forward, we will not do this. We will use industry standards, which is more cash bonuses. But let's go to cash bonuses when we get into production and we are actually producing. People say, yes, over 2 years when these shares vest, you will be producing. But to make a guarantee now on something like that is inappropriate. We can guarantee the shares, and as I say, it also aligns people to what we're doing. So that's why shares are, instead of guaranteeing debt funding for paying benefits. So essentially that's where we're trying to go. We have a bit of a task ahead, it would appear, to get people on the page. It is, in my mind, quite unusual that people are worried more about dilution than what we consider to be the success of the company. We've moved the company forward fairly well over the time period. We've done things slightly differently to get to the position that we are. We've done it in arguably a record time. We would like that momentum to continue. and we're seeing that on site. It's working very, very well. We have great alignment there, and we continue to build our team in Armidale. And at the moment, nearly the entirety of our workforce is planning to move to Armidale. So as it stands at the moment, what we're trying to do is working very, very well, and we would like shareholder support to continue that. Talking specifically about each resolution, resolution 1, increasing the 15% limit. There isn't, anything other than this than good capital management, really. We need the ability to react very, very quickly under all sorts of situations. It's a fickle industry, it's a fickle world. A lot of the factors that we operate in aren't within our control. Do we see that we will need that? No, but do you want something in the bank so that you can react quickly if you need to? Yes. So we see that purely as just good corporate management to allow us to maintain maximum flexibility, and it's pretty standard, totally standard across the industry to do that. Resolution 3 is really the big one. I think I've just talked about that. How that operates is that new staff coming on before we go into production get a 2-year bonus, 2-year performance rights. It is 2 years before those shares vest. If they leave before that period of time, they don't vest. So there is no cost to the company if that occurs. This is only for staff that are coming on before we start commissioning, so it's the initial startup staff. After that time, we'll look at other mechanisms. So it is a capped scheme. It won't be going on in this form after that. It just makes a lot of sense from every mechanism we look at. And given again, and I will repeat it again, I see staffing as the greatest risk. If you look at projects across Australia, whether they be government or non-government, getting people to make it happen is the beginning and the end of every single conversation, whether it's the government building houses or companies trying to start mines. It's all about getting the right people and having the people on site to do the job. That is 100% of our focus. That will relate directly back to shareholder value, and we see this as an excellent mechanism to align everybody along that path. There's not too much more I can say on that. I'm not sure, Andrew, if there's any specific questions to that. If there aren't, I'll talk a little bit about some of the other things we're doing in the near future.
I guess we can talk about a couple of questions that have come through, Ron. As you say, Larvotto's done an incredible job moving so fast to go from acquisition and looking into production in 2026. At the moment, are you hiring? How well is the building of the team going? And will these performance shares will they help with your recruitment?
We've got absolutely no doubt that they will help. Recruitment is going very, very well. We're on track for everything. We've got our in-house team working very, very hard on this. We're largely starting from a top down, so you appoint the managers and then they work with building their teams below them. We have pretty well all senior management on site now, apart from a couple that aren't required for probably about another 3 or 4 months. But we are still recruiting for those positions, given again that we can't just grab people and they turn up a few weeks later if we want them to move to Armidale. So we need to do things well ahead of time, and that's how we're running the task. The build team, who are contractors from MIQM, they will start moving on the site in the near future, very early next month. So, and they are the majority of the workforce, if you like, and we populate around them as they leave as various other tasks come on. At the moment, we are definitely on track. It's going very, very well, and we've been amazed really at the enthusiasm with which people are happy to relocate to Armidale. That's been a very, very pleasing thing. We thought it was going to be a problem. At the moment, it's going extremely well. And they're doing that because it's got some world-class schools there. It's a fair way from the beach, but arguably closer than what it is from the western suburbs of Sydney to get to the beach. So it's in a wonderful location. It's an affordable location with really good schools. So people are seeing it as an opportunity to get out of, particularly New South Wales, with the most expensive housing in the world now, seeing themselves they can go and buy a house that they can afford in a location that gives them absolutely everything they need. And considering most of our people are working, a 9-day fortnight, they have a pretty good life as well. So it's ticking a lot of boxes for people. And when you're recruiting staff in that sort of 35 to 50-year range for senior staff, typically there are kids involved in that, and the schooling that is available in town ticks all the boxes for everybody. So it is going well. We're having great acceptance, but that's because of the complete package that we're offering.
Yeah, great. Ron, are you able to provide sort of a breakdown at all in terms of the performance shares per different roles? And also, could you just sort of discuss the amount of shares and whether, how you've come to that number?
Look, to be quite honest, Andrew, we don't want to get into individual cases. I think that that's totally inappropriate that we do that. I'm 100% sure that the people listening wouldn't want their packages broadcast over a webinar, and it would be inappropriate to do that here. Having said that, the board has been in the industry for a very long time. Our senior team, when you put it all together, we're talking thousands of years of experience. Here we have a pretty good idea of what is required. We don't think it's over the top, and it is totally focused on getting the best result. And as I say, there are many examples of where not having staff available to meet the goals has blown the company to pieces. And I see it, as said, and I'll repeat it, I think it's the biggest risk. And we are doing everything to minimise that risk for the benefit of everybody.
Right. Ron, just sort of one question, just in terms of funding, and then maybe we'll let you continue on just as to the plans ahead, just before we finish up the webinar. But I did have one question that came through. What funding contingency does Larvotto have between peak funding requirements and being cash flow positive?
We've got a fair bit of coverage there, as was made out in the DFS. It's about $150 million build. We have 100 million available, more than that. Some people say that that could be an excess, but I don't think that's a situation that it's always handy to have something for unknowns. So. And the one thing we do know is that things do tend to cost a little bit more when you actually get into doing them. So to have a bit of margin in the bank, but the margin is very good and puts us in a very good position to get this done efficiently and allow for any unexpected things that do happen. And that does. Things can happen. We had 50 centimetres of snow in Armidale last weekend, so we weren't expecting that, and that causes unexpected delays in various areas. So you need coverage for that sort of thing. So having a bit of spare cash in the bank is appropriate.
Well, great. Thanks, Ron. I think you've covered off on this retention and reward program, and if shareholders still have questions, then they can obviously send them through to the company via the contact details. But if you'd like to just move on to, Ron, just the plans ahead and what we've got to look forward to for the rest of 2025.
Yeah, well, it's all go from this point, Andrew. As mentioned, the build team will start on site early next month. They start with about 10 people and fairly rapidly build up to about 60 people on site. A lot of the tasks are quite simple in comparison to more remote areas. For example, we don't need concrete batching plants to make our own concrete. We just call and a truck comes out of town. So all those sorts of things really do help. Exploration is continuing, and we're hoping to have our next release out on exploration results very shortly. We do have an incredible percentage of our team down with influenza A at the moment. The snow might have had something to do with that, so a little bit of a delay there. We've been doing a big IP program on IP, and we announced that we were doing that. It would appear to be an absolutely wonderful technique for what we want to do. That program has completed in the last, or phase one of that program has completed in the last week. Again, that got a little bit delayed. Quite hard to lay IP in snow when you're pumping electricity to the ground and you're standing in water is not the world's greatest idea. So a little bit of a delay there on that, but those results will, when analysed, will be coming through probably the next 3 or 4 weeks. And we'd like to hope that that's going to knock out some interesting stuff. I see geophysics continuing for a considerable amount of time for targeting these nearer surface, particularly higher antimony grade zones that have been largely ignored over the last 100 years of mining there because of the antimony and how difficult that made it getting the gold out. If you don't have a plant to do that, we see huge potential along the 20 odd kilometres of strike that we've got of mineralisation around the mine that IP can help us to target considerably more efficiently. And you know, the initial test work that we did on that certainly identified an ore body that we'd already found, which is a good start. If it can't find one that you haven't already got, it might not work. So we're quite hopeful that will reduce some results. So that is ongoing. Drilling is ongoing. Once the underground mining contract is let, and we have the team underground to support works there, that will be within the next couple of months. Then we will commence underground drilling, but we need ventilation and other systems in place before we can do that. So we'll have rigs operating underground as well. So that's coming on. Of course, the build is coming on, so there'll be many milestones with that. And as I say, we will start converting more of our current resources into reserves, and we'll look to add to the current resources that we have. A lot of the drilling is focused on moving inferred into measured indicated categories so that we can move that through to reserves. So there's a mix between that and looking for entirely new areas. So there's a huge amount coming now that the team is focused on building and exploring rather than writing quite massive resource reports and everything else that's required for DFS and funding and independent technical experts report and dealing with all that sort of work. We're now just focused on moving the project forward. So there'll be a fairly continual flow of news between now and next April, when the big one is that the ball mill's turning and things are coming out.
Yeah, excellent. Ron, we haven't spoken much about antimony, which is unusual for Larvotto in presentations, but just one question that came through: has Larvotto applied for any government Australian or US grants in regards to antimony being a critical mineral?
Well, we have, and I think last week we released that we've been given an $380,000 grant from the government for work that we had undertaken. We're not dealing with the government too much more at this point on that. We deal with government a lot on permitting and other matters, and they're taking a very great interest in what we're doing and have been wonderful in helping us progress the project, and can't say a bad thing at the moment. They're very excited to have a critical minerals project come on, and of course, we also have the ability of doing a little bit of repair work to an area that over the last 100 years probably wasn't, well, definitely wasn't treated as well as what it should have been. So we will leave the area looking better than what it was before. So they're very, very keen to see that happening as well. But not so specifically, apart from various grants that come out. There's some downstream processing opportunities potentially there that we need to focus on. But at the moment, with the whole team working on what we've just achieved, there hasn't been a lot of time for other things. But we can start looking at all that now, and our Perth-based technical team, who sort of look at those big picture items, has now sort of reached its maximum. So we can do that. You don't necessarily want to be doing that from site-based people because they get caught up in the day-to-day operational issues. So it will be interesting to see where that goes. There are different incentives coming out as a funding mechanism, using state and federal government as a plan A, arguably not the best one to use. We've done it quicker than I think I certainly in my career I've ever seen funding come in. So we're pretty happy with how it went, and the mechanism we did to do that and what we're paying for it is more competitive than anything else that I've seen. There's no covenants, there's no hedging, there's no marketing fees, there's no this, there's no that's, and all sorts of other things. So very clean, very simple, and done very, very efficiently. So we're happy to move that forward.
Well, Ron, I think we've covered off quite a bit today, but maybe we'll just give you the opportunity for one last comment, just in regards to the retention and reward program and voting for these performance shares before we sign off for the morning.
Yeah, thanks, Andrew. And I suppose in summary, look, we understand what we're trying to do here. The mechanisms we're providing are in line with industry. We see shares as a better way of going than cash at this point when we're dealing with debt cash. So plus it aligns people as everybody, the first question from everybody is, are you a shareholder? Well, if the whole workforce is shareholders, then everybody's aligned. So that makes a lot of sense. We're totally focused on getting the best outcome for shareholders. We believe that this is the best way to do it. There are many stories there of how it's gone well, getting the right team in place, and there are many stories of how badly it can go, and that will really hit shareholders. So our focus is on maximising performance, and that's how we get reward, and we'd like to think that shareholders think that that's the best way to go. If they've gone and bought shares, they obviously believe in the company, and if the employees have shares, then everybody should be thinking in the one direction.